here's a conventional trading phrase, which is absolutely bullshit, and I'm going to explain it in this video, and that is do not pick tops and bottoms. I'm just on the chart. It's Monday today. There's absolutely nothing going on, so I thought I'd, or nothing for me at least, so I thought I'd make a little video about picking tops and bottoms. There is this adage in trading where you should not be picking tops and bottoms. I'm going to explain why that's absolute crap, and I can demonstrate it with the chart today. For example, the entire phrase depends on the time frame that you're looking at. A retracement is the exact same as a reversal. Inevitably, you're always picking a reversal, which means you're always picking a top and a bottom. That's not to say that you should be picking the exact level that price will turn around at, but inevitably, you're picking a reversal. Generally, I'm looking for this market to go higher as well, by the way, just as a side note. I'm looking for Dow to actually reach up into these highs at some point today, although it's probably going to be very, very slow, so I'm not really bothered about trading this. And just like I said in my last video, I'm looking for high probability conditions, and really there's nothing here. So just to demonstrate this, like I said, you could pick this low in the S&P. You could try and pick out this low, swept some equal lows out, and try and play the reversal. Sure, and they say, you know, don't pick that low out. If I zoom out into a 15-minute chart, this is simply a retracement. Let's say it's a retracement of this particular range here, from this low to this high. So all of a sudden, you're not picking out the low, you're waiting for the low to be put in, which is, you know, possibly even the London low down here, for example. I don't know if it was a 50% retracement. Yeah, there you go. So exactly 50% retracement of that London range as well. You're waiting for that London low to be put in, moved away, and then you get a retracement to then play it higher. So really, it just matters what perspective you're looking at this from. And a lot of trading is that as well. When I talk about bias when I talk about bias in general, what I'm actually saying is bias in relation to how far I'm looking personally. So when one person describes a bias, they describe, I think the market is going to go here. You really have to discern over what time frame that is. For example, that's why you'll often hear the differentiation between a higher time frame bias and a lower time frame bias. I could have a higher time frame bias, for example, for Dow to move up into this high. I think that's pretty reasonable today. I'm not counting on it, exactly why I'm not trading in it. However, lower time frame bias, you can see we're coming down here. If I start saying that's the higher time frame bias and I start trading towards it instantly, well, I shouldn't be trading towards it on the 1 minute chart and looking at these 1 minute lows to stay in, but it's actually, let's say, in reference to this AM range. So for me personally, I'm saying, in this case, we may go all the way over into lunch before we hit that. I actually have no clue. But I'm saying, in relation to essentially the AM session, and then maybe running a little bit over, that's my overall bias. Now, that's also not the higher time frame bias, or what I would consider the higher time frame bias. And, you know, I may go up to a 4-hour chart and say, yeah, here, generally S&P, I'm looking for price to make its way up to that. And depending on when you're watching this video, I'm sure you can check that, see if I'm right or wrong. But to me, it doesn't actually matter anyway, because I'll trade on an intraday basis. But like I said, this is just to demonstrate the idea that that phrase that a lot of people like to say, that you shouldn't pick reversals, is utter bullshit, and it needs to be explained further in terms of picking reversals essentially with no context of a prior range. Because as soon as you have context of a prior range, it's no longer just classified as a reversal, it's also a retracement as well. Again, just like the London low right here, that I said, okay, you could use this as your range for this retracement. But if we go out to the 4-hour, all of a sudden that very same low is also that looks like the reversal itself that you wouldn't pick, because you're now going to pick the retracement, the one that occurred during the AM session, all of a sudden is actually a retracement. So now you can pick that low. So yeah, inevitably, people like to say this because they're on such a low time frame, like the 1 minute chart, that generally they don't go any lower. So they feel like they're waiting for this low to come in. Let's say this low, whatever. You get this retracement here. They feel like when they're entering on this retracement to go higher, they're not picking a reversal. All you got to do is go down one time frame, and all of a sudden you're picking a reversal. But in the context of, say, this low, at least how I understand the charts, we've got a fair value gap right here. Prices come down to hindsight, yada yada yada, whatever. But you would look at the prior range. You would predict this reversal within the context of the prior range, and all of a sudden you can pick highs and lows. So there are many phrases in trading which are absolute bullshit. There are many ways of thinking that are absolute bullshit, and I think it's very important to progress and understand what they actually mean, because they usually do mean something. Whether the people who are saying them have any clue what they're doing. And what they actually mean for your trading, what the term bias means for your trading. If you're learning from someone else and they say this is the bias, okay, but over what span, in relation to what ranges? Do I just start trading in that direction on the intraday chart, or am I going to get an entire day that's, say, a bearish day, a down day, in a higher time frame bullish market? Because all of a sudden you're trying to buy, but the entire, let's say, AM session for futures is down. So you need to understand the context in which these phrases occur. And I hope this has helped understand that a little bit better. And this is just how I see that phrase, and why I don't believe that is a worthwhile saying, at least just not on its own. So thanks for watching, and maybe you'll enjoy some other videos.